Thank you. Welcome to this fireside chat on, as Koide mentioned, on ensuring fairness and addressing potential implicit bias in AI-based activities. I guess this panel is really about the dark side of AI. So increasingly, banks and their supervisors are using AI to be more efficient. AI tools are already delivering tangible benefits and hold promise for more, as discussed in the previous presentation, and for example, Gaia and Aurora. However, the use of these technology also poses significant challenges, in particular, the potential for, as we will discuss, implicit bias that could undermine fairness and integrity. So AI bias occurs when the decisions are based on either skewed algorithm or biased input data. And this leads to outcomes that discriminate either against people or institutions. And these biases can manifest itself in many different ways. It can be around approvals, risk assessments, compliance checks, and enforcement. And as we will hear from the speaker, there's a growing focus on research in this area to make sure that AI tools are safe and equitable. So this fireside chat will focus on three things. What are AI-induced biases? How can we mitigate them, if at all? And are there any recommendation or easy wins for both banks and supervisors? I believe that it was Albert Einstein that said that insanity is doing the same thing over and over again and expecting different results. I think that really captures my experience with ChatGPT. So I'm certainly not an expert in this area, but luckily we have two people that are, so let me introduce them in turn. So Melissa Koide is the CEO of FinRegLab, a non-profit research center that seeks to drive the financial sector towards a responsible and inclusive financial marketplace. No small task, I might add. And in her previous role, she served as Deputy Assistant Secretary for Consumer Policy at the US Treasury. And then we have Lukasz Kubicki, who is the head of Supervisory Technology Section at the ECB. He leads the innovation strategy and has implemented several AI tools. He also serves, and this is very important, as the co-chair of the SupTech RegTech network of the BIS Innovation Network. So welcome to you both. The format of this chat will be as the other ones. We'll do a couple of rounds of questions, and then we'll open it up for the entire audience. So without any further ado, let me go to you first, Lukasz. The ECB has been at the forefront of adopting cutting-edge technologies to enhance banking supervision. Could you tell us about your experience with AI and what bias means in your context?
Good afternoon, everyone, and many thanks, Morten, for your great introduction. And I'm happy that we are starting with the bright side, and then we go to the dark side, that you said. So indeed, at the ECB, quite an early stage, we recognize the need to embrace digital innovation and advanced technologies like artificial intelligence. It was at the end of 2020 when we put in place ambitious digital agenda and invested into the portfolio of supervisory technologies tool called SupTech. And we did this because it was not nice to have it, but we believe it was a necessity for us to remain relevant, to remain effective and efficient as banking supervisor. Today, after 3.5 years of work, we have 14 SupTech applications up and running, being deployed across ECB, but also national supervisors in the SSM. And they bring new capabilities in terms of analytics and support supervisors in their day-to-day work. And maybe let me give maybe one or two examples. starting with maybe with Heimdall as the Nordic god, and we had a presentation from the Nordic Center. So at the ECB, we are in charge of fit and proper assessments of future board members of financial institutions. And as part of that process, banks submit to us questionnaires with details about the candidates, with a number of attachments. They come often in different languages, in different formats, and they have to be analyzed thoroughly by supervisors. It's a massive process. We have more than 1,000 of these every year. And we introduce a platform, Heimdall, that does the first screening and show us the red flags where the attention of supervisors should be paid. So artificial intelligence here is not making any decision, but is alerting us and allow us to go more thoroughly into the specific cases. We talk about unstructured data, and a great question, the structured data, and certainly this is also one of the challenge we face in banking supervision. As part of our process, we need to analyze news articles. We need to analyze all the reports banks submit to us. We have also a lot of internal documents. And yeah, it's really time-consuming to go through that. We are sometimes flooded by the banks. I think they do that on purpose, by the banks with information. And we have introduced Athena platform, another Greek god, that help us to analyze all that unstructured information. So for example, with one click, supervisor is able to get information, what are the key risks on the specific institution, or what are the emerging topics coming in the news related to credit risk and so on. And what is good about that platform, for example, is that it's a modular. So we're implementing new bricks, now building, for instance, capabilities to read the social media that will further enhance our capabilities. And coming back to the dark side, so the biases. I think it's important to maybe decode and demystify that concept. The biases we are all biased. Our opinions are biased, and bias is very natural to human being. In the same way, it is also for the artificial intelligence. So all modern artificial intelligence is based on machine learning, and the machine learning is based on pattern recognition and data. And if in their underlying data there are biases, these biases will be replicated in the outcome of the models. And we have to be, of course, aware of that, and then we have to introduce the measures to deal with this. Let me give you maybe the specific examples, maybe related also to the cases that I was saying. So if we have a model that has been trained on data with bias, and that model is producing summaries, these summaries may not be accurate because they will replicate that was in the data. In our context, what is also important is, for instance, language bias. As we deal with many languages at the European Central Bank, if the model was trained on a certain language, then the results related to analyzing documents in other languages may not also be accurate. And I think this is very important to be mindful of that and not take this for granted. And there are, maybe let me mention maybe briefly a few measures that we are implementing when training the models and when using the artificial intelligence with these models. So first of all, it's about selecting the proper data sets, making sure that it's wide and comprehensive. Second, it is about validating the models before they go into the production and putting this, really having a robust process for that, involving the end users, and that are able to assess the results. And third, and I think this is the most important, keep the human in the loop in the entire process. It should never be the machine, AI, giving the last judgment or making the decision. Human must be there and and looking at your entire process in the organization in the way that human is in the center of decision making.
Thank you, Lukasz. Thank you for those insights. If I can turn to you, Melissa. So where do you see the financial industry is in terms of AI? What is being used, and how do you see bias in that context? Do you have some good examples? And how does what you're observing in the private sector reflect, contrast to complement what Lukasz mentioned?
So that's a lot of questions.
Yeah,
Thank you so much for having me here. I'll take up the rest of our time. No, I'm teasing. It really is a pleasure to be here and talk about some of the work that we have been doing. And I do think it's quite complementary to what you've just heard. So I lead FinRegLab, a nonprofit research organization based in Washington, D.C. And the bias to the work that we do at FinRegLab is really interrogating data and technology for its potential for bringing more people into the financial ecosystem. And we wanted to look closely at, there's this broad term AI, and I appreciated probably the most educated person in the room today couldn't define what AI meant, so I'm not going to join in either. Nevertheless, we've spent a bunch of time over the past 3 years interrogating questions around particular data, because you can't have bias in the data, and particular machine learning algorithms used in a very high risk but high reward use case, which is credit underwriting. And that is where we all want to make sure that we have equity, we have fairness, and we have inclusion, but that we also have accuracy and prediction. And I think it's worth saying too, I don't know that we've said it out loud, why we're motivated around artificial intelligence and things like machine learning are because of the potential that those types of techniques bring to greater accuracy in whatever we're trying to understand or optimize for. And so we have done work looking both at questions of bias, first order. The work we've done is in the United States. Questions about bias like, are there underrepresentation of the data that are being used in credit decisions? And in the United States, we have up to 50 million US adults who are unable to be credit risk assessed because they don't have a sufficient credit history. So to relate to you all in the payments world, we interrogated payments data, transaction data, for understanding the extent to which that data, which is actually more representative, and this is one of the biggest bias issues, frankly, in data and AI ML, are those data actually predictive of risk? And importantly, do certain variables or insights from that data create a risk of bias? In the US, we have explicit laws that require that any lender, bank or non-bank, actually understand and be able to explain to a consumer, a customer, why they got the decision they got. So this gets to this question around explainability, which also gets to the question of, do you have bias in your models? And that's part of the intention of that law. And then many of you may know, we also have fair lending laws, which require that the lender actually make sure that we don't see differences between populations. In the US, we have these laws require that you evaluate for gender differences, or that they require that you evaluate for racial differences. And I call that out because it both helps to anchor questions around whether we're using a logit regression, or we're using a machine learning, or we're thinking about more frontier directions of AI, starting with laws in place. The law is the law, and what those expectations are on the humans who were ultimately choosing the data, choosing the model choice, and then choosing the techniques they may use for generating explanations, that all of that is really important, and having legal girding that really gives the direction is a really significant aspect of how we understand, push the use of these models and the data to understand what might be creating bias, disparities, and also then really important and exciting and this is another benefit of machine learning and AI, new techniques to actually mitigate some of those disparities. And that's some of the work that we've been doing at FinRegLab as well, is really trying to understand how does machine learning, more automated approaches and AI techniques ultimately help lenders reach decisions that are more fair and more equitable and ultimately more inclusive. I didn't answer your first question though. In the US specifically, that's where we spend most of our time, but working with very big banks all the way to very, very small institutions, we are seeing, not surprisingly, machine learning has been used for decades. Fraud, AML, insurance, customer service, right? I mean, these models offer real benefits. Having said that, there is significant regulatory anxiety and uncertainty around when the models are more complex, even in the world of machine learning, supervised machine learning. Can the person or the system, the humans deploying those machine learning algorithms, can they sufficiently generate explanations? Can they understand from a model risk standpoint? Are those models stable? Are they robust when the data change? And of course, these questions around bias. Can an entity using these models really understand and discern if there is bias and then how they're going to mitigate it? And it is, it's exciting to talk about Gen AI, and I know we're going to get there, but even sort of answering these core questions around supervised machine learning are essential steps in this process of how ultimately I think the financial sector and the financial ecosystem is going to evolve in terms of how comfortable can we all get with much more opaque models being contemplated.
Yeah, thank you. Super interesting. I think Lukasz mentioned that all the tools that they apply at the ECB has like a human in the loop. Is the same thing in the financial system?
Ditto. And just to maybe dig for a minute on the explainability work, what we did is we interrogated, we partnered with a team at Stanford to build a handful of machine learning algorithms. And again, because of this legal expectation to explain, to be able to tell somebody why a model derived its outcome, we tested both open source and proprietary post hoc explainability techniques. And what we found is you needed a human in the middle, but you actually, not surprising, you also needed sophisticated humans who really understood the data choice, correlations in the data, the model selection, and what types of post hoc explainability techniques were applied. And so without question, the human and the expertise is a really essential component. I think it is a big open question, and we were having this debate in the lunch hour. How well is explainability emerging in the field of large language models? I think that's a little less clear.
Great, thank you. So returning to you, Lukasz, let me just, the thing, like the outcome is biased, the human is biased, do we get bias squared or what's happening?
But maybe just on that, and also building on what Melissa, you were saying, and turning, I remember from these leadership trainings that I had it was when you have a challenge, how to turn this challenge into opportunity, and maybe with the biases. So if the bias is everywhere, can we use artificial intelligence to address the bias that we have it in the data? And we see more and more discussion and more use cases that are there to use artificial intelligence to address the existing biases. And I think this is also an interesting point on how to go from the dark to the bright side. Yeah.
Very good, but we already touched on it, like how you can manage biases, but maybe if you can, Lukasz, could take us through kind of like how you manage bias have developed over time and how you look to the future, and especially how you predict that you will try and manage bias as you're using perhaps generative AI more and more.
Yes. So it's an excellent question and very topical now, as we just talked about Gen AI in the previous discussion. And certainly the bias management will be different when we use large language models and this advanced artificial intelligence. We are not in the control of selection of the data sets. We are not of control of the training methods. So we need to address that challenge. And let me maybe highlight 3 main points that I think are of key importance here. The first one, Here in Europe, the AI Act is coming, and according to AI Act, the big tech, the providers of these pre-trained models would need to provide more transparency on how the models were trained, which data were used.
Are you holding your breath on that one?
I hope so. And third, how they deal with the biases. And I think that information is really key and fundamental when we select the models for our use cases. We need to compare that information between the providers and make sure that the models which we select, that fit the context and the situation that we have it. The second point that is important, again, human in the loop. And we discussed, I think, in one of the panel during the day in ChatGPT, thumb up, thumb down. We need also to have this kind of interface application in our enterprise-wide systems where end users will be able to assess the quality of the output and provide the feedback. And finally, with development of artificial intelligence, there is also development of how we implement that. And there are a number of technical solutions that allow us to implement artificial intelligence in a more reliable, more robust way. And for example, prompt engineering is important, grounding, or the RAG methods. So all of these are different techniques that would allow us to implement even these large language models in a much more robust way.
Thank you. Melissa, I guess more or less the same question to you. Where do you see bias management in the context of generative AI? And I know you're a great fan of the AI Act, so maybe you want to comment on that.
So maybe we'll get to that. So the work that we have been looking at, these are, credit decisions. Are you going to give somebody credit? What are you going to price the credit or a business owner? And so these are deterministic expectations. Where we are seeing industry in this context of credit decisioning, think about even like dip a toe into leveraging large language models, which are more about signals that are intelligence that can be helpful, is more in the context of do LLMs and can LLMs potentially help to generate feature discovery so that you were then thinking about and have insight on what types of data points you would then put into a machine learning algorithm that you can then generate and explain how that result came about. But other places where we are hearing LLMs being thought about are, and it was talked about in some of the other panels, the need to sort of generate system-wide or large data set-wide insights where you actually have to gather and synthesize information, and maybe even information that humans themselves have put forth, like complaint data. And so leveraging LLMs to get signals and insights from a lot of information. And I've even heard one lender comment that LLMs can actually be helpful where the human would have a hard time discerning what the human writing the complaint was necessarily saying. And so using LLMs in those two contexts are where we're seeing really LLMs show up and being thought about in the credit decisioning space. Yeah.
Well, I think understanding complaints is something I could use at home, so maybe that would be. So two questions before we turn it over to the audience. I think, what's the next frontier in terms of AI? Where do you hear the next big thing is? And also, if you want to reflect on some good pieces of advice for both supervisors and banks that are starting to implement AI.
So I'm happy to go first. I thought the comment earlier today, I think the idea of agentive AI, right? AI acting as an agent is both enormously exciting and I also think tremendously worthy of very deep consideration, just the broader sort of systemic risk implications of, money potentially moving with agents that are acting on behalf of consumers en masse. Nevertheless, the technology combined with the data and how that can be harnessed to, in time, more cost effectively bring personalized financial advice and direction to populations and small businesses who traditionally have been priced out of getting really personalized information is quite exciting and quite powerful and very empowering. And so I think directionally, that's probably where we're headed, with a lot of opportunity, but a lot of important legal and regulatory questions that still need to be thought through.
I think in central banking and in banking supervision, I think we have to step up our efforts. We have heard a lot also today and yesterday that the world is changing, and also the central banking world is changing, and that requires us to roll up our sleeves, to make the hands dirty, and really implement AI and Gen AI. I don't think that we will have the answers to all the questions, and naturally, as central bankers or supervisors, we tend to look more on the risks and delve into the risks, and then there will be always issue of bias, of data protection, and this and that. Of course, we have to take all these concerns seriously, but we have also to turn the page and move forward. Maybe it also requires a little bit of the mindset change. We play not to lose, but we have to play to win, and make sure that we benefit from these technologies in the future. I think that from our experience, what really matters is looking. It's AI and advanced technologies. One is technology, and the other is people. So of course, it's important that the technology, the tools is there, it's working, but the other component, which is at least equally important, if not, that it's really effectively used. And that also requires, I think, that comes back to the previous panel when we discussed about, training, about the culture change in our organization, where, these advanced technologies are seen as co-pilot in a day-to-day work. AI is not there to scare the people, to see only the risk, but really as a facilitator, where AI and the human can work together to bring better supervision, monetary policy decisions, and so on.
Could I add on a little bit? I think there are some, and I'm hoping Yuval Harari later might speak to this. I've heard him talk about it in the past, but there's also the human dimension, how the humans themselves, with comfort or not, interact and engage with AI as their agent or as the intermediary between themselves and any firm or entity they're working with. And we've been looking into some of the psychology and sociology research just in terms of what humans, when shown different forms of chatbots or different types of agents, what do they trust? Who do they trust? And just to raise this in the context of this discussion about bias, it's a really interesting contemplation to think about at the firm level with laws and regulations and aspirations to mitigate bias. That can be done in a systems way. But when you're then putting the human in the position of, let me select my avatar, or who do I trust most, it's raising really interesting questions, and you see it in some of the literature in terms of what the individual human and their particular biases that they bring to their engagement with the chatbot. And so it's going to be interesting to think about sort of what the future looks like as we all have our own individual agents in our pockets, and how we behave, and frankly, what the reinforcement is in terms of what the human is getting in terms of the intelligence. So there's just enormous dimensions of questions to be pondered as we think about agentive AI going into the future, whether in financial services or other stakes and other applications.
Well, thank you. I think now we will turn it to the audience. So please raise your hand if you want to have a good question about the dark side of AI. Oh, there we go. You could introduce yourself and your institution.
Hello. Hello, Marco from the Swiss Center. Wouldn't you argue that AI can also be an opportunity? In a sense, in the past, we had to have people decide on something, and we needed time to see 5 years. And through analyzing their pattern, we saw well, that person is biased in the decision making. Now we have a deterministic system, which we can play through a gazillion of possible scenarios, see is this system biased or not, and only then deploy it.
Yes, I think this is hopefully not on the dark side, but indeed on the bright side of the AI. And I think I think if you ask a question, who is the best place to do supervision? Would that be AI? Would that be an expert? Or would that be an AI and the expert working together? So certainly that would be the third option we would select. And this exactly comes to boil down to your question, where you have now not only the expert but also the AI working together, and certainly bringing much better results when none of them could deliver.
Yeah, I mean, to stick with my example, which I think is a helpful one, I mean, we've had decades of lending decisions that have been made by humans, and humans are bringing their bias to those decisions. Moving to more automation and better data, we can begin to overcome some of those biases, but I think we also have to recognize, this is very true for the United States, we have tremendous bias built into our data, right? Systemic inequities, wealth, and income. But yet, with legal and institution motivations to seek out, understand, and find ways to mitigate that bias and to leverage AI, machine learning, and more representative data, there's enormous potential, I think, to help begin to make sure that at least decisions that are being made now on a going forward basis, which have implications for wealth opportunities, job opportunities, that we're starting to get that right and do that better. And so I think it's really exciting from that standpoint for overcoming our dark sides.
Thank you.
Yeah.
Thank you. I'm Tom Schack from Swift. I think one thing that's really interesting about the bias is that the kind of uneven level in which people look at it. And Melissa, you just made a comment about the bias, and humans have been doing this for years. It's kind of the same thing with self-driving cars. Right? People crash cars all around the world every day, and it just kind of doesn't even make the news. But one Tesla, makes a bad turn or has a crash, and that makes the headline, and everybody, all focuses on Tesla, right? So what do you think can be done? Because there's almost a bias for the way we used to do things, which is probably inferior in most cases, compared to actually doing it in a more automated way. How do you deal with that, and what are some of the opportunities there?
Well, I mean, we're motivated to provide our research for policymakers and market actors, and we generally always calibrate our evaluations relative to the existing status. What are the existing stats? And so even in sort of the emerging machine learning and more automated approaches for finding accurate but more fair machine learning underwriting models, we compare that against the more traditional, look at your variables, what's a proxy for a protected class, and drop it, right? So always trying to calibrate against existing is a helpful way we find, especially with policymakers. But you're right, there is sort of pressure on where might this go? So I hear the point, exactly, yeah.
Yes. I think this question shows, how important it is to bring reliable information and decode and demystify, some of the myths. I remember when we started the work on digital innovation, management was scared of robotics, of robot process automations, which are rule-based, and they were saying, yes, if things are not copy-paste properly. Then there was the full discussion about the use of the cloud. No, it's not anymore on-premise. I cannot control that, and my data is in the cloud, and how much. And the same now comes with AI, with Gen AI, and with all the risks, and it shows how important is to bring the facts on the table and really educate the entire organization, from analysts, experts, but up to the board members. And at the ECB, banking supervision, we have launched this program. So our senior management go literally to the school for a couple of days every year to learn about digitalization and innovation. Our board members are taught on AI, this year on Gen AI, and I think we trained more than 2,000 employees on innovation, on digitalization, on AI, and it is so important to bring these topics in the organization forward.
Can I add on? Oh,
go ahead.
I'm sort of going to take you up on your AI Act comment. I think one of the things that we really have to think about, it's the machines, but it's also very much the data. And I will call out, and happy to talk about this in the break, these questions around how we are protecting consumers and giving consumers right to control the data that are used for different purposes. We're debating this in the United States right now. That is, in some ways, coming to a head in terms of what data that actually may be useful, more representative, whether it's credit decisioning or even fraud models are being contemplated, like what data are going into those models. How we get that consumer permissioned, but also consumer protection set right, knowing that the financial sector, no matter what models are being used, need access to data and the ability to build models. We're finding that the need for this sort of deeper conversation to make sure it does get to bias. I mean, you've got to have representative data, but being able to access the data can be a real debate and challenge right now, just given some of the agendas around consumer data privacy.
Thank you. Last question here.
Thank you. I'm Silvia Tanasio, Italian Banking Association. There is a doubt that I have since a while, and it's related to the good expression you used, the right human in the loop, the sophisticated human in the loop, I think you said. Because we already experience some alerting systems in our branches where people are suggested to take particularly care of a transaction or a customer, considering a potential risk, etc. And those people used to abide to the machine, because if it comes out from a machine, it should be right. You know what I mean? So the kind of learning, the kind of education, I'm wondering if it's appropriate to give to our people is, should they learn to question what is suggested from the machine, or is it too risky to instruct them to question what comes out from the algorithm? Yeah. Thank you.
Wow, good question.
I have two thoughts. One, there is research showing that, I mean, even historically, when humans shown machines, expert humans and non-expert humans, we default to the machine, and that's a huge risk, and I think we all realize that. On the financial services sector side, where they're thinking about how potentially to leverage insights from LLMs, some of the ways that they're thinking about deploying it are to have much more sophisticated but preset responses in any particular context that are then provided to employees. So it was human oversight to get the insights from the LLMs in the first place, to then think about, okay, what would be a human-controlled set of more sophisticated responses that is then being provided to the customer, to the consumer. And so trying to leverage the intelligence, but also control it with human determination about what's going to be communicated. So something in that area might be helpful, especially as we're all learning how to transition and what to trust and how much to keep questioning.
Lukasz, any view in the last 10 seconds?
Yes, there is a risk, and this is that people will switch off their brain. They will take the beautiful text drafted by generative AI. Do not question that. So we have to be very clear that who is accountable for the results, and this will be always the human, never the machine, and this has to be explained very clearly.
Thank you. The clock has reached 0, and Christina is looking at me, so I'll spare you for my otherwise fantastic summary of this fantastic panel. And if you would just join me in thanking the two panelists. Thank you.